Hey guys, welcome back to High Yield Intraday Trading. I hope every one of you is doing good. So before we start discussing today's topic, let me request you all to subscribe to my YouTube channel by clicking on the subscribe button here. Once you click on it, you will get the confirmation on the left bottom corner. Post you subscribe to my channel, also make sure to press the bell icon and click on all. You will get the confirmation on the left bottom corner so that whenever I upload a video, you get the notification about the same without any misses. Also, I would request you all to subscribe to my Telegram channel with the name HYIT Intraday Calls because I share a lot of things over there and it might be helpful to you in some way or the other. All right. So when it comes to day trading, it takes a lot of sharpness from your end to decide on the ongoing things. I mean, I'm talking about the things that happen on the charts. Okay, of course, there are many other things that goes on off the charts as well, like placing your orders, struggling with your brain and stuff like that. But again, let's talk about or let's keep this discussion confined to the things that happen on the charts only. Okay, so one of such things that can fool us big time are the breakouts because in day trading the time is really less and different traders follow different time frames to make their decisions. Okay, like in one 5 minutes time frame, okay, a stock can be seen bullish, but on a 15 minutes time frame the same stock might look bearish, right? So again, we will not talk about the breakouts that happen on a specific time frame, rather we will talk in general. Okay, now my suggestion is stick to the time frame that you are following if that time frame is being proven to you as profitable. Okay, and the takeaway that you can expect from this video is that you will know the right way of handling the breakouts if at all a breakout has happened. Okay, so having that said, first thing first, how do we say that a breakout has happened? I mean, there has to be a marker that marks the breakouts, right? So that marker that can be the marker that I'm talking about can be an indicator, any indicator to the matter of fact, or it can be a trend line, or if you are someone who hates using these kind of stuffs and tag yourself as a price action trader, then in that case the marker would be the candlestick patterns and the chart patterns. So these are the only things that anyone in the trading world would use to point out a breakout. Okay, but the question still remains unanswered, and the question is, has the stock really given a breakout or is it a fake breakout? Now, the answer to this question is crucial because depending on the answer, you will initiate your trade. Yeah. So, how exactly should we decide on this thing? Now, normally, if you see, let's say you're using an indicator, for example, a 20 exponential moving average, a 20 EMA in a 15 minutes time frame. Okay, now if a stock is moving sideways below the 20 EMA for an hour or so, and then it breaks the 20 EMA in the upside and closes above it, in that case, we state that a breakout has happened. And the expectation of the trader would be that the stock will start moving up from there. Hence, we initiate a buy position. Now, this very technical analysis suits the traders who are very new. Now, when I say suit, I don't mean it's right. Okay, it's just that the guy is learning the stuffs, and whatever he is seeing on the charts, he is following the exact same thing. Hence, when the candlestick breaks the 20 EMA in the upward direction and closes above it, that new trader immediately reacts, and for him, it is an upward breakout. But does this thing holds good, or is this thing true when we trade practically? The straight answer is no. Okay, just because a candlestick breaches a particular resistance level, which is a 20 EMA in this case, it does not mean that it has changed its trend. It does not mean that we can simply go ahead and initiate a buy trade. Okay, so the very same thing applies if a particular candlestick breaches the 20 EMA in the downward direction. Just because the candlestick has breached the 20 EMA in the downward direction and has closed below the 20 EMA, that does not mean that you can initiate a sell position. Okay, things become really different when you trade live. And if you are a trader, even if you have traded once in your lifetime, you will agree to me with this. Okay, you will surely agree to me on this particular thing. Okay, so there are many tricks and bits that needs to be known. Okay, as I said, just because you are seeing a particular candlestick breaching a particular support or a resistance level, you cannot go ahead and initiate a buy or a sell trade. Okay, so what exactly should we do, or how exactly should we technically analyze this thing to make sure that this is a real breakout and that we are in the right position to initiate a trade? Again, remember that in day trading, the very first thing that you need to take care is your entry, because a right entry takes care of many other things, like it reduces your stop losses, it maximizes the chances of you winning the trades, it keeps your head cool, etc., etc. Okay, now coming back to the breakout part, let me take you to the chart, okay, and show you the thing there so that you are more clear on what I want to convey. Okay, so getting onto the charts here, I have already taken a best case scenario. So this is a 1 day time frame of Mariko. You can see it on the left top corner here. Okay. The script is Mariko and it is a 1 day time frame. Okay. Now, remember that we are talking about day trading, and this is just for an example purpose that I have selected the 1 day time frame. It should not be the case that you should, like, you are into day trading and you are analyzing the stuffs in a 1 day time frame. It won't work. Okay, so if you are into day trading, if you are an intraday trader, then you have to take the decisions on lower time frames, like 5 minutes, 3 minutes, maybe 15 minutes, or maybe even 20 minutes. Okay, but it should not exceed anything above 30 minutes. Okay, so remember that. Now, coming back to the chart here. So, this is the thing that I was talking about. Okay, the blue line that you see is the 20 EMA, which can work as a support and a resistance depending on where the candlestick is closing. Okay, now from here to here, as you can see it very clearly, that it is in a downtrend, right? So, it is making lower lows and lower highs. Hence, we know that Mariko is in a downtrend, and also it is not able to breach the 20 EMA in the upward direction. It is below the 20 EMA, right? Now, this candle is the one which actually breached the 20 EMA and closed above it, which means that it has breached a particular resistance. Here, the resistance is the 20 EMA. Okay, so it has breached the 20 EMA and has closed above it. Okay, now is this a breakout? Just forget about these three candles. Okay, let's say that we are on 1st Feb 2022, and that is the day on which Mariko has given an upward breakout, and we are saying it as a breakout because it has breached the 20 EMA in the upward direction and has closed above the 20 EMA. Okay, so my question is, can you go ahead and initiate a buy trade just because this candle has been formed? The answer is no. Again, okay, so the right way to approach these kind of scenarios is, when you see that a breakout has happened, you need to let go the script. Okay, you need to allow it to go up further, and then you need to allow it to come down towards the support level. Now, the 20 EMA, which was working as a resistance, has now become a support after this breakout. Okay, so you need to allow the script to go up, and then you need to allow the script to come down towards the support level. And once it comes down towards the support level, if it starts moving up again, that is the time when you initiate a buy trade. So in this example, the candle which will be formed after this candle, after this green candle, that candle will be the one where you should be initiating your buy trade. Okay, in intraday trading in a 15 minutes time frame. Okay, you don't initiate a buy trade after this candle. Okay, this candle has nothing to do with your decision to take a buy trade or to initiate a buy trade. Okay, so you need to allow the script to go up. It doesn't matter how high it goes, you need to allow it, and you don't take a trade when it is going up. Okay, you need to allow it to go up, Then you need to allow it to come down, which we call as a retracement. And then after the retracement towards the support level, when it starts moving up again, that is the time when you initiate your buy trade. Okay, in this case, this candle gave a breakout, then it again went up, and the third candle, this red candle, is the retracement candle. Okay, so it was retracing towards the support level. Okay, now one more point that I want to bring in here is people get confused and they make the statements like, we just see one red candle, so we cannot consider that as a retracement candle. Okay, that's not the right thing to analyze. Okay, the retracements that happen, it can happen with multiple red candles or even with one red candle. Remember that. In this case, it is just a one red candle. Now, just because it is one red candle, we cannot deny the fact that it is a retracement candle. Okay, so it is very much a retracement candle which retraced towards the support level. And this green candle gave the confirmation that the bulls are still strong, the bulls are still in control, because of which, after the retracement, the bulls are taking the prices even higher. So, where do you initiate your buy trade? You will initiate a buy trade immediately after this candle closes and the next candle opens. Okay, any price at the next candle. Okay, so this is how you should handle the breakouts. I hope the things are clear now. Okay, and one more fact just to add to this thing, people don't actually, how do I put it? People actually remain inseparable in waiting for these two candles. For, like, if we talk about this scenario, so the breakout happened in this candle and we allow it to go up, then it has to retrace. So people fail to wait for these two candles. I mean, it is just a matter of 30 minutes, guys. Okay, if you are a trader, if you call yourself as a trader, and if you are not able to wait even for 30 minutes and then take or initiate your trade, then I'm sorry, but trading is something which is not meant for you. Okay, now in this example, if we consider this to be a 15 minutes time frame, we have to wait for 30 minutes. There will be situations wherein the retracement might take even 2 hours, so you have to wait for those 2 hours. It's as simple as it is. The script will not move according to you. You need to allow it to move up. You need to allow it to retrace down. Then, when it comes up again, I'm sorry, then after the retracement, when it starts pushing itself up, that is the time when you initiate a buy trade. So, people normally fail in this particular time frame. Okay, they are not patient enough to hold themselves back, you know, for the retracement to happen. And that is the reason why they initiate early trades and their entry itself goes wrong. Okay, I hope you're getting the point. So, the final thing is, if you see a particular resistance or a support level being breached, wait for that particular script. If you want to initiate a buy trade, wait for that particular script to go up, retrace down, and then when it starts moving up again, that is when you initiate a buy trade. Okay, similarly on a sell trade, if you see that a particular script is or has breached a support level and has closed below the support level, then allow the script to fall, then allow the script to retrace in the upward direction, and then post the retracement, when it again starts falling, that is the time when you initiate a sell trade. That is exactly how you should be handling the breakouts. Okay, so I hope you are clear on this. Okay, so yeah, that's it from my end, guys. And for the guys who have not watched my previous video, I have put in the video card on the top right corner of this video, the eye symbol that you see there. You can click on it and watch my previous video. And as always, would request you all to like and subscribe to my YouTube channel. And also, please do not miss the ending of this video, as you might get some more information about HYIT that might be helpful to you in some way or the other. And please feel free to ask your questions or queries, if any, in the comments section, and I will surely reply back to them. And also, please do not forget to like this video if you liked it. Okay, so that's all from my end, and I will see you all later. Hope you all will stick back. Happy trading and take care of yourselves. Bye bye.